Want to go to the trading floor in Chicago and find out from the source where everything is going on and what is driving this market the way it is today. We have Scott Gecas. He's with Walsh Trading there in Chicago, and boy, oh boy, a lot of volatility in the grain markets today. It seems like a real battle of the wills today.
Yeah, for sure. We had that big gap up yesterday, another big gap. So if you look at the chart, just on the daily chart, you have two gaps that they have to fill. As a technical trader, I mean, that's what you look for. You look for a backfill for the gaps to fill. Whether or not that really is going to happen, we have to wait and see. But the main thing that's driving all these prices is the extreme weather through the Midwest. Throughout the country, very heavy rains, heavy winds. That's taking the main focus, even over the trade war talks, which it looks like they're not going as well as expected. But we have to wait and see what is going to happen. But the headlines for the risk is still going to be a little bit with the Chinese trade war talks, as well as the weather. Looking at the 10-day forecast, though, it is looking a little bit drier after the first week of June. So we're going to have to see how this is really going to play out.
So is that what is taking the wind out of the sails on the bull market today?
Yeah, for sure. So if you look at the call skew, just going into today, the calls in soybeans were a little bit over $1.50 more expensive than the downside puts. Corn was about $1. Wheat was maybe $1.25 as well. So we're going to see how this is really going to shape up. But people are gravitating towards the upside calls in a panic type manner.
So the question is, even if it does turn a little bit drier, will it be dry enough long enough to get any planting accomplished? Because it's going to take a while to dry out these soils.
Yeah, for sure. And that's the big question. That's the unknown factor. Well, how is that dry weather going to be sustainable, and how long is it going to last?
Okay, we'll come back in just a moment here, Scott, and then we'll take a look at what's going on in the other markets as well, and we'll take a look at this livestock trade. We are talking right now with Scott Gecas. He is with Walsh Trading in Chicago. Don't go anywhere. We'll be back in just a moment. We're talking right now with Scott Gecas, and he's with Walsh Trading in Chicago, and he's positioned right at the edge of the trading floor in Chicago. I see the Dow Jones Industrial Average is down about 200 points right now, and if we look at the dollar value, let's see what it's doing for the U.S. dollar index today. On the futures, we have the June up 120 points. We have September up 120 points as well. The June futures contract at 97.970. So the Dow is down. The dollar index is up. We had the crude oil market, and last time we checked, it was over $1 lower. It's still down $1.32 at 57.82. So when you talk about all these financial markets and equity markets and energy markets, does that have much impact over on the livestock trade today, Scott?
In the past it has, but this is a different type of scenario. So the stock market's getting hit hard due to the retaliatory with the rare metals from China, as well as this crazy move in the bonds. With the yield curves moving to recessionary type levels, that's one of the reasons why you're seeing a lot of pressure on the U.S. stock market. Now, how is it tied into the livestock market? Well, that just goes to the whole recessionary factor. So if we start to get into some type of recession, we expect the livestock market to pull back a little bit just because of less demand. So that has yet to be seen, but this weather right now is not helping any of that seasonal demand, especially from last weekend and moving forward. So we're going to see how that really is going to shape up.
So far, the livestock futures seem a little timid today. Let's take a look at where we currently stand on the live cattle board here first. We'll bring that one up. Currently, on the August contract on live cattle, it's 43 lower at 107.35. Now, I will mention that June is trading 23 higher, but a lot of positions have rolled out of that by now. We have October down 18 at 107.72. And switching over now to our feeder cattle market. We currently have the August contract 3 cents lower, or 1 tick lower, at 142.20. September down 3 at 142.65. So almost unchanged on the nearbys. Now the deferreds are 20 to 45 lower if you go out into the fall and winter months. If you look at the lean hog trade, the first 2 days of this week had sharp losses. Today we have minor losses. June lean hogs down 30 at 83.67. July down a dime at 85.60. We have August down 42 cents. So as it stands right now, Scott, we have the first 4 contract months at $80 or above. But that's a far cry from that $90 mark that we were looking at earlier.
Right. And if you look at the chart and you look at the volume indicators, it looks like it's just a little bit of profit taking. Even with the last few days being a little bit under pressure, it has zero volume. I was on last week talking about that 10,000 mark with the contracts level, and we have yet to hit some of those contracts. Some of those contracts, they haven't even hit $10,000 or 10,000 contracts in 4 days straight. So that just leads us to believe it's a little bit of profit taking. The call skew is definitely to the upside. Everybody is expecting a big, massive import campaign from China.
Interesting stuff. Very observant. All right. Well, thanks for sharing that, Scott. I appreciate that. Thanks for sharing with our viewers and listeners. Scott Gecas of Walsh Trading Incorporated in Chicago. There you go.